Welcome back, everyone. It is March 3rd, 2026. It's about 10 o'clock a.m. Eastern Time, and yeah, we're going to have another fun video today. So, let's jump into it. Oh, wait, I didn't set myself up. Okay, so I'm all set up. Okay, so let's jump into it. So, I recorded a video this past weekend, and I believe we were over here. So, let's take a look. The video was actually all about the big candle. If I were you, and I wanted to kind of catch up to what it was, just go take a look at it. It's a very short video. It actually talks about candles like this one right over here, this candle right here. And you can obviously see that this big move that it made right here followed basically the rule that I was saying in the video on Sunday. So go take a look at that if you get a chance. Okay, so now the question is, how do I plan my stop loss? How do I plan my stop loss? For this, we're going to jump over to my little chalkboard right here. Where do I put my stop loss? So, without anything, let's draw some lines here. Let's get this, and let's get that right there. So, and I'm also going to put a dotted line in the middle. So the question is this: what do you do right here, and what do you do right here? Let's call this a range right over here. If it's ranging, then the chart would look like this. Middle, drop, maybe drop again, hit, come back up here, tap, come back over here, boom. So you made these lines as the extreme part, the extreme low and the extreme high of the range. That's what you did. So that means that you have a candle that probably touched right over here. And maybe it even wicked a little bit in here. So let's just put a little bit of a wick right there. So where do you put your stop loss? So your stop loss needs to go above the longest candle that has the longest wick in that section, in a range, because it's the outside that you're looking for to be stopped out. You get stopped out on the outside. So let's say I entered here for a short. Now, where would I put my stop loss? Well, I wouldn't put my stop loss right where I entered. Instead, what I would do is find the longest wick that's in there. And if it's the top of this, then I would give it a little bit of fluff. So I would put it up here. Now, it has to be a measured range that works for you. Again, if this is like a 5% gap between your entry and your stop loss, and if you are doing that by 10x, then that would be a 50% loss right there. So you have to really figure out what you're willing to lose and what your leverage is and everything. It just becomes arbitrary to what your trading style is. But this is well high enough that if for some reason it did a liquidity grab, you are still in. So if another candle, let me get rid of that. If this came over here and it bounced and it went up here, just like so, at least you are within the means of the range, just in case there's a fake out. So the same thing goes for the bottom. Let's say that you were to enter here in a long, because that's what you've got. So that means that your stop loss needs to be a little bit fluffed underneath. And you need to find the candle that works for that. Because if this were to come over here and liquidity grab out or manipulate out, then you need to be well far underneath it so that you can stay in the range play. So this comes back down to what you're playing at this point. Now, the other thing that you need to do is you not only need to figure out where you need to enter with your stop loss, but you also need to know where you're going to take your profit. And the best place to take your profit is going to be in areas that it's going to react. So let's just say that's the 50% line. So if you enter here in a long and this is your stop loss and it actually comes up here, you want to get close to taking your take profit there. Now, what you also might want to do, because this market is really kind of shifty, is take multiple take profits, right? Where you take the majority of your take profit. By the time we get up to this 50% line, you've taken the majority of your take profit. So that's a way to do it as well, okay? Just don't leave money on the table. That's all. There's no reason to it if you're playing a range. Now, again, this gap here, it matters. It matters what your percentage is and your leverage is for you to get in and get out. So you have to measure. You're going to have to measure this area here to figure out what it's going to be. Now, this is for a range play. What matters is the pattern that you're trading. So, for example, we've got a trend line. If you are trading a trend line, then that's your entry. right there. So if this chart looked like this, enter, enter, enter. Now, okay, in hindsight, you probably won't know that this is it right here, but you might be able to know this one. Now, if it ends up being that it comes over here like so, well, then you know where your stop loss needs to be. So if I were to enter right over here, then your stop loss is anywhere beneath it that breaks that trend line. And your take profit usually should be something that works for it. Let me get rid of this. That works for it. Like measure these areas. And again, if you have something that looks like this in there where there are multiple candles that are touching each other, well, then this is probably where your take profit should be. Just like so. Your stop loss could also be at the top over here when it breaks the line. But that wouldn't be a stop loss. That would be more of a take profit. Because it all depends on your pattern. So we've got the range that we've done, which we talked about already. And we've got the trend line, like so. And now you've got this pattern where it starts to go and it creates a BART pattern, like so. So looking at the pattern, if you were to buy up here, this ends up becoming a range play. If you were to buy down here, and you are all the way up here, and you start to see that it is ranging out, this is a take profit area. And if you wanted a stop loss, it needs to be below the group that you had before, like so. And going off of the wick, that is the lowest in that section, to give you your stop loss. Now, what you don't want to do, let me get rid of this. Now, what you don't want to do, and again, here we go. Here's the range, because the range is the easiest one to really play. If you diddle in the middle, then if you enter over here, then your stop loss probably is looking somewhere over here. Because the range, if you long, and it went over here, and let's just say that you bought in, if it comes down here again, your stop loss should be a little bit over. But this ends up being a huge gap. This gap here will end up making you lose a lot of money. So if you are going to play the middle, then you have to give yourself a range that you can play for your stop loss. Okay? Just like so. Because if you end up going in the middle of the range, then you end up playing the sides like this for your stop loss. All depends on how you're doing it. But this is a good insight to how to find it. Now, let's go take a look at Ethereum now. And Ethereum's got, since we've already set it up, let's take a look at where the stop loss needs to be. So you see this candle right over here? See how it's at the range low? See how this one's touching the range low? So if you were to buy in right over here right now, then it's possible that it comes all the way back down over here. And it overshoots a little bit because it'll take this candle out. So what you want to do is you want to find the lowest candle in the group and the highest candle. So let's just do that real quick. Here is the highest candle on the range high. So right above here is probably where you want to put your stop loss. Right over here somewhere for a liquidity grab. Here is the lowest candle on the group. So you probably want to come over here somewhere for your stop loss. Now, if you get in over here, then you measure how far you are to that stop loss. And that's really the range that you're betting on, right? So what I like to do is I like to cut this. I'll cut this. I'm not interested in getting in here because the middle has such a far way to go. So I'll actually get in halfway over here, which ends up being something like that. That would be my stop loss. That would be the range that I'm betting on, right? So last thing, let's say you did want to buy in the middle. Well, where do you put your stop loss? Find the lowest candle in that small range right here. And this is your stop loss right there. The reason why is because you overshoot the last candle. And if it were to come down over here, you might be able to stay in the game for it to bounce back up. But this has to, you have to really look at what is going on in these zones. Because if it loses this area, it's coming all the way back down to the bottom, which can possibly come back over here to take this guy out right there. So again, where do you put your stop loss? It depends on what the pattern is that you're playing. And you always use the highest wicks, the lowest wicks for your range plays. And if you've got any other patterns that you're looking at, well, then you look at it.